We're like rocking and rolling right now, Jess. Okay, so what are we talking about today? Wake up.
We're talking about people that are renewing with the new higher rates, and what are some options to keep their properties or make it more affordable.
So people that got their interest rate at like maybe 3%, 2%, and then now it's 5 years later, terms ended, now they have to renew for like 6%, 7%.
Yeah. So the good thing is, really it was 2020 that rates went to like 2%, right? So most of those people would have done 5-year fixed. So we have 2 more years until they come up for renewal, or 1.5 to 2 years, right? So those people are going to be stressed when it's coming, but hopefully by that point, rates are going to be more in line with normal, which normal is not 2%, by the way.
No.
Right.
What would you say normal is?
I don't know. I mean, I think if rates went to 4, we'd all kind of be really happy at this point, right?
Yeah.
But I think when it comes to renewals, one of the most important things to know is the bank, I mean, unless you have a really, bad repayment history, the bank generally is going to offer you a renewal. So you don't have to requalify, which is one of the things that people really worry about. Like maybe my credit went sideways, I had a job change, I had a kid, I'm on mat leave, whatever the reason is to make you worried about whether you're not going to be able to get a renewal or not. The bank will usually give you a renewal. So you don't have to worry about that. So that's the first and foremost thing.
So they don't actually look at like income, debt, credit score, the documents.
Nothing.
Again. They'll usually just renew because you're already existing.
You're an existing, you have good payment
even with
history.
the higher interest rate, even that much higher.
Even with the higher interest rate.
I didn't know
so, and as silly as this sounds, the stress test, which I won't hide the fact I'm not a fan of whatsoever, was designed when rates were 3
Low, yeah.
to say, hey,
Buffer.
when rates go to 5, 5.5, can people still afford this?
Right.
Right? So everyone who's qualified during that period back at the beginning of 2020 or mid 2020, they qualified with the ability to afford rates if they go to 5.5.
Right. Yeah.
I think the hard part is rates being at 5.5 and the theory of qualifying at 5.5 are 2 different things.
Yeah, and with having interest rates now be 5.5%, 6%, depending if you're variable fixed, the amount of term you have in your contract too. Then add the 2%, right, for the stress test. Then add like 7%, 8% that you're qualifying at. Doesn't make sense. Like, I don't know. No one knows if rates will go up to 8%, 9%. Probably not. Like, things would really break, right? So, like, why don't they get rid of the stress test now? Because feel like it's not needed. Like, the odds of it, like needing to qualify someone at 9 because it could go to 9. Like, I don't know. I don't think it would.
The stress test to me should be gone.
Yeah.
Should be absolutely wiped out. Sure, you needed it when rates were at 2%.
Yeah.
Understand. Don't necessarily agree with it, but understand. Okay. But it's the stress test has to go. Because it's actually, in my opinion, stopping people from making choices, or it's limiting what they can do. So, for example, maybe if you're buying a house or getting a mortgage today, I'd say take a 1, 2, 3-year rate, maybe go variable, and kind of at the end of the term, 1, 2, or 3 years, maybe rates will be lower and you can take advantage. Yeah. But with having to qualify, 1-year rates right now at 7%.
So then +2 on that.
+2, you're qualifying at 9.
Right.
Right? Like, so now some people don't have the option. They only qualify on a 5-year.
Because it's the lowest.
Because it's the lowest. So the issue is with the stress test is it's actually stopping people from, giving them a little bit of flexibility, doing a shorter term. Maybe they want to sell in 2 years, but they got to take a 5-year. So I'm not a fan of the stress test at all.
Yeah.
And then in terms of people who are having their payments go way up, what kind of advice do you have for them? So, I mean, some people are starting to rent out part of their house. I've had some people where like their in-laws will sell their house and then move in with them in a basement apartment or something like that to offset the cost. What are some other things that you see people doing?
So the first thing you should do when you get a renewal is not sign back to the bank. And it's kind of funny, but it's not. But a lot of people will get a renewal letter from the bank. They don't want to call around. They don't have any idea. If you're looking for mortgages, you kind of have an idea of what rates are. So when you're going to buy, everyone's investigating and what's the rates? Here's the rates. And then the mortgage comes up for renewal and all of a sudden they're not as educated. What are rates right now? Oh, that's my bank's offering. And they just sign and send it back, right? The bank's rate offer to you when you first get a renewal offer is not going to be their best offer. So the first thing they should do is not just sign the renewal. They should make phone calls to mortgage brokers or whoever it is that they want to call and say, hey, what are rates right now? What's a good rate? What should I do? So if, for example,
it's always negotiable.
It is. Yeah, it absolutely is. And if the bank just sends you something, you sign and send it back, then that's what they're hoping for.
Yeah.
Right. They get it back and they're dancing in the bank. Oh my God, they signed it. So I think the first thing you do is you investigate, like, what are the best rates right now? right? And we do, as a mortgage broker, I do lots of deals per year where people are like, hey, I'm with this bank, that bank, this bank. They've offered me this rate. And it's like, oh my God, we can beat that, no problem.
Yeah.
And we can save money. So the first thing is to shop around, see if you can find a better rate. The second thing is, a lot of people now, when you take a mortgage, you start off with a 25-year amortization. 5 years in, you're getting a renewal, you have 20 years left on your mortgage, right? So if you're in a spot where you feel like you can't afford it, talk to a mortgage broker, go refinance. If you have debts, include them. Get that mortgage payment back to a 30-year amortization. And I'm not saying take a 30-year amortization and keep going 30 years, but when times are tough, and you're having problems affording, I'd rather say take a 30-year amortization and sell your house, which is a long-term asset.
Yeah.
Right? So take a 30-year amortization then.
Yeah.
Get rid of any debts you have. Get a car loan in there. Get a credit card in there. Whatever it is, get your monthly liabilities down.
I guess if you're like, if you know you bought your house, you're on a 5-year term, you bought your house like 3-4 years ago and you got that 1 or 2 year left, so you know you have to renew and you know the rates are way higher and you're kind of worried about it, get in touch now and make a plan so you can know, okay, maybe I pay off this much debt. So when you do have to renew, you're in a really good position and you're not like euchred.
Absolutely, right? And when it comes to that stuff and being prepared, whether it's a year or 6 months or whatever in advance, I've never heard anyone say, oh, I was too prepared.
Yeah.
Right? Like in anything in life, not just mortgages, right? Like, so at that point, yeah, even if you're a year away, start looking at what that landscape looks like. What does it look like? What are rates now? How can I position myself? Because in my opinion, I would say 4 months in advance of your renewal is when you're going to be able to kind of lock a rate in. But get in touch 4 months and a couple weeks ahead of time so that it gives you the time to prepare, get all the documents, get everything together. So when you're exactly 4 months away, we send it off and we can hold a rate. Right? So what happens is you hold a rate and I say, okay, I can do 5.54 as of today. If rates go down, you're going to get the lower rate. But if rates go up, you're locked in. So when I say holding a rate, that's kind of what I'm referring to.
Here's another idea I literally just thought about right now as you're talking. So sorry, Mike, I wasn't listening
no
to
problem.
Past 20 seconds, so it wasn't that long. Is it possible, the idea like you own a house and you have to renew, you're pretty much unable to, and this might not be what you want, but better than the alternative of selling your house and losing it, which could be to rent your house out. And then you can use that income coupled with your own income to then hopefully qualify to buffer against that interest rate increase. Is that like possible?
Now,
but it's like, where would you go
they're
live?
still living in the house and they're just renting out like a lower
no,
unit?
Say you rent out the whole house, even go move in with mom and dad or something temporary for like a couple of years.
Yeah.
Rates go down and then you can move back in.
Some people do that too.
Yeah. Oh, yeah, you can.
Oh, okay.
I mean, the only thing is that just comes to my head is, you know, with the mortgage payments increasing as a result of the rates increasing, you know, is the new mortgage payment going to be higher than what the rent is, right? Like, and maybe they'd have to be a little bit of a shortfall for a couple $100 a month for a couple of years or something like that, and that's.
But then they can keep their house.
But they can keep their house, and it'll be worth more than that. You know, in a couple of years, they'll make that money back.
And then when they want to move back in, they can give notice to the tenants to move back in for their own personal use. So, yeah, I think it's a good option.
Yeah, I just thought about that right now. I'm like, hey, I wonder if you could do that.
Yeah, and any, like, I mean, at a time like this where it is difficult, people are having problem with affordability and stuff like that.
Yeah.
Any idea like that is helpful, because anything to help people keep that, because realistically, real estate is an asset and it's going to be worth more, regardless of what's happening right now. In my opinion, it's going to be worth more in 10 years than it is today.
Yeah.
Right. So, you know, why get rid of it? Because you'll regret it.
With private lending, is that something that you start to look at more potentially when rates get high like this? Or is it always a matter of like conventional or A-type mortgages or B mortgages, whatever the terminology is? If that goes up, private lending over here just kind of goes up with it. So it doesn't like it exceeds and this becomes attractive.
Yeah, it goes up with it.
Okay.
So
yeah,
and private rates are pretty expensive.
Yeah,
right
they'd be
now,
more
right?
than the, yeah.
So.
I get that. Do you have any other ideas, Jess, that you can maybe do? If you
I think those are some good ones.
Yeah.
Yeah. I think we got some good tips for people.
That's perfect. Well, thank you, Mike.
You're welcome.
Sweet.
How long was that?